All right, hey there, guys. Sam here from TradeDevils-Indicators, and today I wanted to go over what has become really my very favorite entry model. I guess we'll use that term. Oh, now it's not new. It's just a lot of people reach out to us that they're struggling with entry. So I thought this would be an opportune time to review this and maybe refine some of this a little bit to make it easier for you. I would tell you that if I could only have one price action entry model to trade with, this is the one I would pick. This is, in terms of the risk reward parameters in the setup, I don't think there's a better single entry model. Now, this does require patience to let it set up, and there will be times where you'll be frustrated, you'll be left hanging because it won't make the retracement levels that we're looking for. But that just, welcome to trading, right? It's the discipline to wait for your pitch or your setup, if you will, that will serve you well over time rather than chasing every little swing and retracement. So again, this is not new. Classic price action traders would call it a head and shoulders. It's often, if there's a trend line involved, it's been known as a king's crown here, as you see, looking like a crown here. The key piece to it here is the break of the last swing low. So if we think in terms of market structure context, it's I guess we're fine here. It's the break of the last low that leads to a break of structure. To come down, and I'm just going to call it a shift in market structure. We don't need to get caught up on whether it's a boss or a chalk. It's a shift in market structure. So the protected low here that led to the break of structure here, when that is broken, it's the retrace coming back the other direction here, and the discipline is waiting for it to get above the 50% level. So if we just use a fib tool, or I happen to be using the Gann tool, just to give me a 50% of that range. Now, very frustrating if it doesn't do it, right? Very frustrating if you get this, right? There are times where it's going to leave you hanging, but it's that discipline and that willingness to wait for it to set up will serve you well. And I think you'll as we go through some live chart examples, you'll see the benefit of this. So here it is with a trend line, but kind of modeling after the king's crown, where as long as we've got two pivots to draw the trend line, if we break the trend line and in turn, not just the trend line, but break the swing low. So we're doing two things to qualify it: trend line break and the swing low, the protected swing low that did its job and led to the break of structure. On the retrace here, if that gets into that 50%, you can look for it on the underside of that trend line as an entry. Now that would, of course, here idealized in line drawings, here we'd be in the premium zone here at the underside of that trend line, and you could anticipate, likely you'd want to use our old friend here, our fibs, looking for contemporary measured move, the David Halsey measured move, looking for between the 50 and the 618, or the golden zone here, looking for that to in turn create the reversal here. So the target might be first or second targets, again, right, to depend on the time frame and context on a higher time frame. But that's the trade right there. This is what we're after right here. Now, ideally, right, again, this is idealized here via line drawings here. Let me bring that down a touch. That's perfection, right? Now, of course, the market doesn't always give you perfect, but you will see this more times than you perhaps just you're drawing your eye to this. You'll start to see this as opportunity more and more often in the marketplace, because you do see it across multiple time frames on a very regular basis. So again, just to review here, the key to it starts with, are we in a trend? Are we in an uptrend? It wouldn't matter if we were looking at a 1 month or a 1 minute or a 10-second. Are we in an uptrend? If we are breaking the last strong low that led to the break of structure, if we break that on the retracement, we want to be looking for the potential reversal. Right now, I'm adding in the fibs here, but the key piece being there, as long as we get into the premium here. So we're selling in the premium with the target and the discount. And you can see it here just on the bullish side. I've taken off the trend line here because you'll see there are times where the trend line won't be a factor. But here would be a more traditional market structure entry here, where we've had the break. Here's the break of structure. Here's the strong high that led to that break of structure. When we come back, we break this strong high, shift in market structure. Then we go, as we start to retrace, now coming back, we want to be looking for entry here. Now here I've just drawn up and proposed that you might have a fair value gap there or an imbalance. So as we come back looking for that confluence factor here of the golden zone here with a fair value gap, of course that's idealized and perfected here in line drawings, but that's what you're looking for. Right, there it is, right? So again, I call it a 1062 King's Crown. Obviously, it's going to look very close, very similar to a head and shoulders. So call it whatever you will. But the point is, I just want you to understand the setup, and then the emphasis being the really two key points here. Of course, this is critical, right? You don't even start looking until you've got that break of the strong high or low. And then on the retrace, we want to let it get into the premium here if it's a sell, or get into the discount if it's a buy, and then look for that entry. And the stop placement here, again, this is easy to do on TradingView, right? We'd be looking for something like this. Now, depending on the size here that you're trading, well, that'd be a question of how far from the pivot are we trading here. This would give you, over 2 to 1. There's nothing says you have to, give it to that pivot. It's just a function of what your risk tolerance is. You might do something like that. There, now you're closer to 5 to 1. You could use something like a 707 here. Right, so that might be another possibility here, where let's see here. Let me bring up a 707 so we can see that. So you might say, okay, I'm not gonna give that any beyond the 707, or maybe the 786. Right? Maybe it's just that's your preference, right? What your risk tolerance is. What are you trading? Right? Are you trading the NQ? Are you trading the ES? Are you trading micros? Are you trading crude gold? It's a function of what your risk tolerance is and what you're comfortable with. So that we sit there at the 786. Now I've got 4.72 on first algo target here, 4.7 to 1. Right, the refinement here of your risk tolerance, well, that's up to the individual trader here. Of course, the ideal way to do it, right, and perhaps if you're trading micros, you take it you do it this way, it would be the pivot high, right? Now, but note here, now I'm down to 2.26 to 1, which is not terrible. I wouldn't scoff at that, but if you prefer to get those higher risk reward numbers here, and you want to use an extreme here, 707, 786 would be a good idea. Okay, let me get that off of here now. Okay, so there it is as it sets up in the King's Crown here using the trend line. Here it is in just a basic flip with a break and flip coming into an imbalance here in the golden zone. Okay, with that, so let's pause here for a second, and we'll go over to Ninja and look at some live examples. Okay, so here, let's see, I've got a 1 minute, a 15, and a 4 hour on the micro ES. Now, I've got our market structure indicator on here. I would tell you it's not essential because you can see this. All that just makes it easier, right? It's just an efficiency tool to help identify when we see the breaks of structure, and then the retracements or the pivots being broken along the way. So now you could use this in any combination here. In the interest of keeping it simple, I've got only our market structure indicator on. I also have a 21 McGinley with our squeeze indicator just to identify those areas where we might want to be cautious about entry, because we have contraction, and we know from contraction comes expansion. So this is not always the best place to be entering, but it's always the case with a squeeze, right? It's kind of an alert that we're in that consolidation, but it's good news because we know that without any exception ever, from that consolidation comes expansion, right? It's absolutely universal law. Okay, so that said, now just to do a quick review here, and most of you don't need this here, but just in case we've got some new viewers or people that are just starting to learn this here, just conceptually here, if we're in an uptrend here and we've got this, now if we continue on, so we're getting higher highs, higher lows, we're in an uptrend. Now for every break of structure here, here we'll just keep it super simple here. Right. Again, I know most of you are familiar with this, but just to be thorough. All right. So with every break of structure, foundational to price action trading, using market structure as our skeletal structure. With every break of structure, we anticipate following the break of structure a retracement. So break, so here, break, retrace, break. You're anticipating the retracement following this last break of structure here. But what you're not anticipating is that we're going to break the low that led to the break, right? When we do this, oh, okay, that is a shift of market structure. We've broken the strong low that led to the break of structure. So here you see this trade setting up right in front of you, right? Again, you see it all the time, right? So that's the trade. Get off of there. That's, God, I can get that off of my mouse. There we go. All right, so here, oh, give me an arrow, right? That's the trade right there. Simple as that. It's not complicated. It takes a little bit of discipline to wait for it to get. Let's see, as I put the whole thing together. Oh, let's here, we'll do it this way, right? We're going to wait for it to get over the 50%. Here, pretty good free draw right there. We're going to wait for it to get over the 50%. This is idealized, right? Again, via line drawing, but what's the key piece here? Right here is the key piece, right? So we've broken that. And if I were to add a trend line, now we can start to add in some of the king's crown kind of an idea here that anywhere in this zone, barring a break of that high, anywhere in this zone under the trend line would be an area of interest. Right now here, it's just, again, idealized to catch that. Well, we know an algo will fire there. Doesn't mean it will hold there. Certainly could get through, could go right up to the edge of that trend line. It's still a valid trade, right? We could do this. Still a valid trade. As long as we don't, that's where you're idealized, right? That's where your stop would be. As long as we don't break that, or if the trend line goes a little bit further, this would be just, I can get that up there, see what I mean? Trading view, just easier to do it. That's perfectly valid. All right, and very likely you've got this would be a supply zone here. Call it an order block, call it what you like, right? It's supply, order block here. Why? Because it led to the break of structure here. Now, if there's a fair value gap here, all the more, right? Then we know we have a very solid order block because we've got the imbalance that it produced, right? So money had to be committed to create the break of structure, retrace to it. This is likely going to be defended, right? That's the theory, right? Again, there are times when that breaks, right? It just blows right through it, but this is the theory you're looking for. It's not going to be 100%, but that's the setup. And if you maintain the discipline to wait for it to get into the premium, or if it's a buy, wait for it to get into the discount, you're going to like your results, right? It's certainly, if you're struggling with entries, this should be a substantial improvement to your results. So there again is just the theory laid out for you, things that you've likely seen before, but just so we're all clear on it, again, the key piece being after the break of structure, we are anticipating get out of there. We're anticipating the retracement. So here, 15, 4 hour, 1 minute. So if we look at the, let's start with the 4 hour. If we look at the 4 hour, right? Is there any question, right? We're going back to summer of 23. Okay. Well, this again, hard to be confused about what's happening here, right? So there it is. Just that thing is hard to get off your mouse. I can't do it. Well, you get the idea. Swing, lower high, lower low, lower high, lower low, right? So we don't, again, I could do the line drawing if I could get that bloody thing off my mouse. But then you get the idea. So now we're coming back the other way. So after what would be a more traditional swing, retrace, swing, retrace, swing, retrace, now I just get a monster rip, right? This is, welcome to the modern markets, right? So we're just off, right? So even a 240 here almost doesn't contain this. Now, if we focus here from this last swing low, and then we get into the NVIDIA earnings and all this. But if we focus here, I'm going to try this again. Swing, retrace, right? Now I get just barely a higher high, retrace. Swing, retrace, swing. Now, this is a little tricky here. It's a little insight here in knowledge of market structure. We don't get a higher high or higher low. So this is the low, right? This is all internal, right? We do not get a higher high or a lower low. So this is internal structure. There it is. All right. Right, so there it is, right? Just drawing off of the swing structure, higher high, higher low, right? So how will we know that when we have the first ingredients for that swing, for that trend change? Well, we're going to have to break this, right? Or depending on if it goes again, eventually it's the break of the last strong low. So here, as we sit looking at it, it would have to be this one, not this one. Right, because that's the one that led to that break of structure. So we'll see, right? Again, not to get caught up into the swing structure ideas, right? But you'll be able to see this here, and as you see here, right, now it's again, if you're waiting for a 50% retracement, you had some frustrating times here where you're waiting for that deeper retracement here, and they're just, you know, if you want to maintain a high win rate and the excellent risk reward that comes with this, well, there are going to be times where you're going to be frustrated because that discipline is going to keep you out of the trade. But what's your alternative, right? To break your trading rules and chase something? Again, think twice about that. All right, let's get you out of there. Let me get that down here. Let's go to the 15 minutes, see if that helps us anymore, right? Just kind of reviewing here. Well, okay, right, so now we take it to a 15 minutes. So we again looking at the last, the last, what have I got here? I've got, I don't know, 4 or 5 days. Maybe, I guess I got more than that. I think I got 2 weeks here. Okay, so any question about the downtrend here? Any question about the uptrend here? Right, clearly, right, that we see a lot of variance here in the trend structure as we go down to lower time frames, right? We don't see this as much on the 4-hour. We get down to the 15, obviously we see downtrend, uptrend, downtrend, uptrend, right? So we see this changing. So if we start to focus in on where the opportunities are, where we want to be looking, well, we don't even want to start looking until we've got the condition that we want to focus on, which is that first break of the more substantial of the significant high. So let's or low as the case may be. So let's start right here. This has got a fairly good example. I'm gonna do 2 things here. So one, I'm gonna just mark this here. So when I zoom on it, make sure I go to the right spot here. Let's get that. As I've done this a few times here, I know that occasionally that you'll lose it, even though I tried to zoom in there on that particular spot here. Oh, here, I'm going to pause here. I'll get there in a second. All right, there it is. All right, it took me a minute to find it. Okay, we've been in a downtrend, uptrend. Here's my high. Well, on the way up here, right, I'm getting breaks of structure, right? So here, break right here. So let's focus in on this last high. Now, granted, we're doing this on the 15 minutes, so this would be a bigger trade. Well, let me zoom in here. Okay, so here's the last low here that led to this break in market structure, right? So we've had, this is a change of character. We can use that. Oh, come back here, right? So we've got this swing here is gone up, broken, right? Here's the break, right? It's clearly, right? This is our market structure indicator identifying the change of character for you. So we come down here, now we come back, there's the retrace. Now look where we are, right? I know, once again, it's like, oh, really? Okay, I know. Let's see here if I put these on. Okay, so now I've just added our measured move indicator just to help identify, it's just to save time, so I'm not drawing these all the entire way. Okay, so we here's the low, right? We break the low, right? So we're now anticipating, right? Change of character or market structure or a break of market structure, same difference, right? We're still anticipating a retrace because it's the break of a strong pivot. Right, this led to this micro change of character led to the break of structure. So when we break that, what we're sitting here waiting for it. Oh, am I going to get a retrace? Well, look what I get, right? So I'm coming right. So let's draw it up. So, right, we're clear about this. So I'm going to go from the high. Right now, our market structure, our measured move indicator is going to use 2 pivots. It's going to use this one and this one so that you don't miss one. But you'll note we go just, if I draw it, we go just, get out of there. We go just far enough to get into there. There's the 50 from the high, swing low, swing high. So I'm just far enough to get in there, to get on the other side of the 50 in the middle of a massive imbalance, fair value gap. Huge, right? Now, is that an easy trade to take? It should be easier to take it. I know you've been in a raging uptrend, but this is substantial, right? So that's when you get alert. You can set an alert in our indicator. Hey, if I get a change of character here, alert me, because on the retrace, heads up. If I can find that retrace here where I can find the confluence of an imbalance, I can find a measured move, a 50 or a golden zone. Note I'm under the 21 McGinley, so I've got all of this teed up here. Let's assume you're not going to get tick high, but right to the target, this 81 ticks. And now this is micros, right? But that's still, it's about $100 in micros. Obviously, right? Do the math, right? So we're going to go all the way down here. That's 120 ticks. But let's not assume you're going to get the swing high, swing low. You're going for that first target, right? The obvious target here would have been the prior low here. So that we get a change of character here and a break of structure. So we get a shift in market structure after the break here. Now I get a break of structure to the downside. I open that up, there's another shifter. So just like this was a break of market structure, this is a shift in market structure. Down we go. Now we're coming all the way back up here. Let me clean this up just to clarify here. Now here's one where it's a shallow retracement. So we get the exact, let me take those off just to, so that doesn't distract you. So now we're coming back all the way the other direction here. Now note that's the initial balance here. We get a break of structure here. All right, so here's the low that led to that break of structure. So when I break this, oh, am I going to get what I'm looking for, which is that retrace? Can I get into the premium? Doesn't happen, right? So there's one of those times where you're frustrated going, oh, come on. Doesn't get there, right? And then we go into a long squeeze. So the time for that trade, you'd be questioning whether or not, oh, here we're long squeeze and then we roll over. So you do not get the entry here. Well, sorry about it. All right, market's not going to always give it to you, but note here we get more activity down here. So as we keep going here, now note I'm still on the 15-minute here, but just sometimes it can be easier on the 15 because there'll be so many of them on the 1 minute. So here's the break of here's a break of market structure. What am I expecting after a break of market structure? I'm expecting a retrace. If I'm going to take the high here that led to the break of structure and put it here and draw it over, right now. Wicks, right? Those are wicks that are tickling the other side of that 65. But what is it they're doing? They're coming back to rebalance that fair value gap there. So they're coming just to mitigate the fair value gap. So that's very tradable. Here's your target. So I mean, there it is, right? We've even got a little trend line here to grab some trend line liquidity here. So here's the break. Here's the retrace. Right, there's the confluence. Essentially, that's all you're looking at here is the confluence of technical components. We've got the break of structure, the retrace. Here's a big fair value gap. It gets the wicks get through that just enough to get to the one above it, and then down we go. Right, now, stay with me. Right, there's another break of structure here. Let's just keep going here. We go into the next day, but it doesn't matter. Right, the same idea applies. Here's the break. Let me get that off. Right, here's the break of market structure. What am I anticipating, right? Down, down, down. Oh, we're coming back. Again, it's not rocket science. Now, look at the confluence here. Oh, boy, that's annoying. What are we doing? Right, it wouldn't matter what day I was using, right? It wouldn't matter. This is any time frame, any asset, always there. Right, it's time for the fact that I'm on the micro MES 15-minute makes no difference. Doesn't matter. Right? You can see this on every chart. So here it is. Here's the break of structure. Now I'm retracing. What am I coming back to? Well, note what I come to the underside of the 21 McGinley, which is a great reference for bull bear on any asset. I come right into the imbalance, the fair value gap. I come right to the zone between the 50 and the golden zone here, which I know is my prime zone, and algo is going to fire there. Break the IB mid. And I'm in the premium, right? So here's my premium zone here from the 50 and up. Here's my premium zone. Here's my discount zone. So I'm selling in the premium, target in the discount. I've got a swing low here as my target. I retraced into an imbalance and my measured move. Boom, that's a trade you want to take. Here's the target. What happens? Break of market structure. Well, let me get that off. Right now, you can just, I mean, I'll bore you to death if I do this, 25 times. The idea is for you to do it. You do the same thing. Now, you don't, if you don't have our market structure indicator and you're using Ninja or Sierra, right? Case may be, because we have the same thing for Sierra. Or if you're, if you've got the skill set, right? You just draw them yourself, right? Draw some lines. But certainly, there's going to be an advantage in using a tool like this so you don't miss anything. So what do I get here? Break of market structure. What am I waiting for? Retracement. Where's the high that led to it? Let's do the same thing again. Right now, of course, right here. Now we're way beyond the golden zone here. But am I still valid here? If I, here I guess I can use this here. This will do it because this will have a 50% in it. Okay, just one of the tools in our toolbar here. So I look at a range here. So here's the high that leads to the break of structure. Now I'm anticipating a retrace. Now I'm deep here, right? That may well be past the 786. I'm deep, but I'm underneath the strong pivot here that led to the break of structure. So if I'm coming back into that, well, I've got, you know, potentially an order block here, or maybe you're like, boy, I didn't see much here. Although it's hard not to note all the wicks being grabbed here, right? So potentially this is all just liquidity, right? Try. Here's what they're not doing. They're not breaking the strong high that led to the break of structure. So we're into that discount here now. I don't get it until way over here. So maybe the timetable here, because that's the end of the day, right? That's 4 o'clock, but it's the same phenomenon. Now let's carry on here. Just we'll go to the 1 minute here, which is where most of you will likely be looking for these. Look what, well, this is this is abnormal, right? This is not typical, right? So we get the massive rip off of the Nvidia earnings, but look at the close. I know this is not many people would have been able to trade this, but in the concept here is quite clear. So here's what happens here. So here's the break of market structure on the low. Now this is at the end of the day. If any of you were trading on that day, at the end of the day, they started buying well in advance. Like, did they know something, right? I mean, this about 20 minutes before the earnings were coming out, we just started going vertical. You know, I won't be that conspiratorial, but it sure was interesting timing. So after this, so what do? We break the low up. Now, it's hard to see it here. We get this big wick retracement here, just for fun, in case you weren't aware of this. What does it do? Right into the golden zone. Right, so if you need any more, which I can't believe anyone would need more confirmation of how precise this algorithm is, there it is, right? That's after the earnings are released. That's just the shakeout of week longs, and then we launch, right? We've never looked back. So, but note how precise the retrace is, right into the golden zone. So there it is. Here would have been, here's the change. Here's the high that led to the break of structure. Here's the change of character. So we've come down. We've led the break of structure. Here's the change of character. I go up. Now I'm coming back down. What am I doing? I've got a massive fair value gap in a golden zone. So there it is, right? At the end of the day, again, this wouldn't be something that would be easy to trade, but nonetheless, there is the actual pattern here to the tick. Now, after that, well, now it gets a little trickier to find a retracement here. But again, each one of these times where I get a break of structure, what am I getting? Getting retrace, right? So here, if I draw it, sometimes this is just a little bit easier. Here, well, we can use this one. Break of structure, retrace. Break of structure, retrace. Break of structure, retrace. Break of structure, ooh, long wait for a retrace here. And if I'm waiting for a 50, right, it doesn't happen, right, until I get to this break of structure. Now, again, I can't, it's not like I cherry picked this, right? So what happens here, right? So better to do it this way. Okay, so we get break of structure, right into the open. What am I waiting for? Retrace. What happens on the retrace? I get a change of character, right? So here's the swing low that leads to the break of structure. I get the change of character here. What am I anticipating now? Retrace. What do? Right to the IB low, which is natural support and resistance. Comes right, ticks the IB low, right? And then we end the day down here. So let's get that off. What do you think's right there? Well, first, you can see it here. There's a fair value gap here. There's an imbalance here. It's coming back just to tickle the edge of that. Do I have to even draw it? I'm going to assume you all know what's there. All right, runs out of time at the end of the day. Right into a golden zone. Swing. Right, we're waiting for it. Oh, God, you don't think it'll actually go right to the IB in the golden zone? It won't be. I couldn't be that lucky, could I? Could I? Well, let's pause there, and I'm going to take it over to the 1 minute.